Interestingly, Microsoft trading down a bit today, but yesterday really got a lift past $4 trillion market capitalization because we thought that clarity is there in terms of relationship with OpenAI. What clarity do you want from the numbers tonight?
Well, the tech investing market is going to be focused on Microsoft's CapEx. We're $1 billion above street at $31 billion and expecting more than $125 billion this fiscal year from Microsoft. Microsoft investors are clearly focused on two things. It's Azure growth. Can the reacceleration continue? We've seen really strong net new Azure revenue trends over the past couple of quarters from the company, as well as what you're alluding to, the OpenAI relationship. We called it a sigh of relief yesterday, just that announcement is out, and we're seeing, you saw the stock react well yesterday, just some signs that the companies are working more closely together still after, I think, a lot of back and forth around what's happening between the two companies right now.
Michael, based on your model for Microsoft, like has this unknown about the relationship with OpenAI really been an overhang on the stock?
I think, I think it's the first time in a long time we've started to field questions on cloud market share. Azure has been the dominant market share gainer since ChatGPT took the world by storm. We've seen Azure just continue to outpace growth of the other hyperscalers. We're talking about a business that's approaching $100 billion of annual revenue, growing near 40%.
Right.
These are unprecedented rates, but with some of the deals that we've seen announced away from Microsoft starting to show up, there have been questions around just the size and scale of the aspirations of OpenAI and how much of that accrues to Microsoft versus the broader cloud hyperscaler ecosystem. So, we think
this
the
is
fact
it.
that
This is the conversation. Let's do this. So GCP has a 1 million TPU deal with Anthropic. Microsoft has started having a relationship with Anthropic. AWS and Bedrock is kind of thinking, well, what else can we offer? Grok is now available on Azure, I think. Basically, the landscape's changed. Does the hierarchy change now? AWS, Azure, GCP?
I mean, we think Microsoft still has the lead in terms of market perception. That relationship with OpenAI has been very advantageous. So we think Microsoft share gains have been primarily a function of two reasons. Number one, just the later stage movers to cloud are disproportionately more skewed towards Microsoft and more traditional businesses, whereas Amazon won the early adopters, Microsoft seeing the next wave come to cloud. And then the relationship with OpenAI has really improved the perception of innovation within Azure and created an environment where startups are building using Azure really for the first time. And I think everyone wants access to OpenAI's technology, which is embedded into Copilot. You can directly tap the OpenAI API through Azure. That's an exclusive agreement. Those things are holding firm, so we're still very confident in Microsoft's position. But the world has changed. What we underestimated was just how big the size of just the training market would be within the AI cloud market. So we're just seeing growth that we haven't seen in technology in quite a long time.
And to be fair, maybe Microsoft did too. The issue for them is supply, not demand. They're having to turn to other companies that you analyze, CoreWeave. They're looking at Nebius and Nscale to really be able to fulfill some of its overall cloud needs. How are you thinking about capital expenditure rising for Microsoft in the next full year 26?
I mean, we think it continues to go higher. We're modeling above consensus right now. We're $1 billion above consensus for this quarter. We updated that just based on some of what you're saying. We hear the capacity constraints in the market. We hear data center capacity still coming online. We think the most important thing beyond what Azure presents for the quarter is where they guide. The December quarter should have a little bit less capacity constraints. So I think investors will be listening carefully to see how they characterize Azure growth for December as well. But you're right, this is a good problem to have for Microsoft in many ways. We have a business that we're saying is $100 billion in scale and can't even keep up with demand right now. Just unprecedented levels of interest.
What about, though, the productivity tools? How much of a lock-in does it have because of the software?
We can't get away from it. I think it's been the toughest moat to crack in software. Right? We've seen many companies try, and the honest truth is we've just all been conditioned to work in Microsoft and very effectively. Copilot is a way to extend. I think the productivity use case that is pretty interesting from the numbers perspective, investors are focused in on Microsoft 365 Commercial Cloud, which does embed the Copilot metrics as well. That business is forecast to grow 13 to 14% this quarter. Any upside would likely be attributed to Copilot and could create, I think, the next big unlock for Microsoft. The productivity business could start to show growth improvement alongside Azure.